triple digit or so. So 0.5% cut coming in there, 23,200. Although it did manage to defend that level, and the Sensex as well down 400 points. Over the course of the last 2 weeks, the Nifty has shed 3%. Nifty Yatin, two second straight week of losses, as I mentioned. Particularly looking at today's session, we saw the broader end of the markets outperform. The mid cap index, although was in the red till about midday, it managed to stage a good recovery. In fact, ended the day in the positive territory. And, but for the week, the broader end of the markets are largely flat. If you look at the mid cap index, because of course we saw outperformance coming in the mid and small cap pocket this week. NSE advanced decline ratio was at 1:1, slightly tilted in favor of gainers today. IT So 0.5% cut coming in there, 23,200. Although it did manage to defend that level, and the Sensex as well down 400 points. Over the course of the last 2 weeks, the Nifty has shed 3%. Nifty Yatin, two second straight week of losses, as I mentioned. Particularly looking at today's session, we saw the broader end of the markets outperform. The mid cap index, although was in the red till about midday, it managed to stage a good recovery. In fact, ended the day in the positive territory. And, but for the week, the broader end of the markets are largely flat. If you look at the mid cap index, because of course we saw outperformance coming in the mid and small cap pocket this week. NSE advanced decline ratio was at 1:1, slightly tilted in favor of gainers today. IT and banks, of course, were the biggest laggards, thanks to the sharp losses that we saw on shares of Infosys and Axis Bank, both of them reacting to numbers. But aside of that, if you look at the outperforming pockets, FMCG, metals, pharma, realty, these are the pockets that saw some bit of buying coming in. In terms of individual movers, uh, you know, Reliance Industries, that was a bright spot today, almost a 3% uptick reacting to its numbers. Brokerages also positive on the stock. So 2.8% kind of gain coming in on Reliance Industries. BPCL a close second, 2.5% gain coming in there. Metal names like Hindalco, Coal India were doing well, and so were FMCG names. Look at Nestle India, Tata Consumer, they are among the gainers. Even Asian Paints today doing well. SBI Life also among gainers. Numbers came in line with estimates. Positive, VNB margin came in above what we were expecting. If you look at some of the laggards, top two losers were from the banking and IT pack. Infosys, almost a 6% cut coming in because of the guidance of a softer Q4. That kind of overshadowed all the positives that we saw in the quarter gone by. Axis Bank also 5% cut, weak numbers. Shriram Finance continues to be under selling pressure. Kotak Mahindra Bank is the other one that was losing, and so were the likes of M&M and other IT names like Wipro, TCS, etc. But Yatin, broad end of the markets, how was the action panning up?
So I think
out
the
there?
first half was quite a washer because Reliance came off days high. We had Infosys which opened with the gap down. Overall, obviously the market ended with the advanced decline ratio of 1:1 because post 2 o'clock we saw some recovery in the markets. But look at the laggards. Stocks like SW Solar, after the management commentary, that stock went down 10%. Kalyan Jewelers, that stock continues to remain under pressure. Levels of 500 seen. 7% down for that one. And most important point for Kalyan is that we have mutual funds like Motilal Oswal, a couple of FIIs which probably could depress the panic button, given the fact that the shares are down significantly. Probably, if the fund manager decides to liquidate stock, then there could be some incremental selling according to dealers, and that is keeping the stock under pressure. Volumes of nearly 3 crore shares, for Kalyan Jewellers. So on huge volumes, the stock is down. Infosys, Axis Bank, obviously, Nandita was mentioning, one of the top F&O losers, 5% down for both of these ones. But stocks like Policy Bazaar, K Fintech, Varun Beverages, SBI Cards also witnessing some profit taking. All of these stocks were down anywhere between 3 to 5%.
All right, those were all the movers and shakers today. But I think let's take stock of all the stocks. Although numbers were good, revenues
Uh,
managed to beat estimates. Dollar revenues of 1%,
hmm,
outdid peers like
hmm,
TCS. Rupee revenue also came in higher. Constant currency revenue almost 2% up. Steady deal wins. Headcount addition, strong management commentary. But all of this was overshadowed by the guidance. Although full year guidance was revised 4.5 to 5%, but the management has indicated there will be some bit of softness in the fourth quarter on the back of wage hikes, because the wage hike cycle starts in February and will happen in two phases. So both Q4 and Q1 may see some bit of impact on margins. Uh, if you look at what really aided revenues this time around in a seasonally weak quarter was pass-through revenue, and some contribution from the recent acquisition in tech to revenues as well. Aside of that, margins also saw expansion of 20 basis points on a quarter-on-quarter basis. But going forward, as I mentioned, next two quarters will be, softness in the wake of wage hikes. But Project Maximus and cost optimization, that could cushion the impact. But still, Street is a little spooked by this guidance. Let's see what the brokerages have said then. Macquarie says that the revenue from Infosys's top five clients was down
hmm,
6.5%, in dollar terms on a quarter-on-quarter basis. And attrition rate, of course, did go up by 80 basis points to 13.7%, but the brokerage expects it to worsen going forward. Look at Bernstein. They have, maintained the faith. They have outperformed rating. Target price at 2,330 rupees. They've noted that the company has delivered a beat on all rounds, revenue, margin, etc. And a net new deal at nearly 60% is something that's a big
hmm,
positive. And it has, categorized Infosys numbers as the best earnings of the season when it comes to large cap IT. Morgan Stanley, overweight rating, target price at 2,150. Net headcount addition drives a view of reasonable acceleration in revenue growth. That's something that's been pointed out by Morgan Stanley, and they've said that the free cash flow to net income was one of the strongest in the last few years. Jeffries also has a buy call, target price at 2250. Revenue growth, of course, the surprise on that front being a positive when it comes to Jeffries. They've said that strong deal wins, obviously commentary in terms of improving discretionary spending is something that bodes well for the coming quarters as well. They've raised the earnings estimates by 2 to 3% and expect the company to deliver 11% EPS compounded annual growth rate over FY25 to FY27. HSBC, however, has a buy call, but they have said that sustainability of pass-through revenues in FY26
hmm.
remains uncertain, because going forward as well, the street will be watching out for whether or not the kind of pass-through revenues that the company has seen in this quarter sustains or not, because in Q4 it is expected to come down a bit. Nomura lastly has reiterated Infosys as its top pick in the large cap IT services space. But looking at the stock performance, Yatin, although Infosys has outdone
Hmm.
stocks like TCS, but over the last 3 months, Infosys has lagged the broader IT index. And even if you look at the valuations, most of these IT stocks after the good rally that we've seen over the last 1 year, second half of the
Correct.
last year, they are not really mouth watering, so to say, because they are above the 5 year average.
Absolutely. And Infosys, I think the results were okay.
Hmm.
Probably some profit taking in trade. Probably the management guidance was mixed. The TCV also, if you look at the expectation, it was close to $2.5 to $3 billion. It
Hmm.
came on the lower end
Yeah.
of the market expectations.
Yeah.
But I think IT, probably with Trump swelling in,
Hmm.
with a couple of events in the US markets, I think investors still not sure. The best way probably investors found today was to book some profits from the table and then relook at the IT sector. But if you look at TCS's commentary, Infosys's commentary, They are expecting that the discretionary spending will improve. Large orders are moving better. Generative AI and AI projects are doing well. So commentary remains good, but probably a general profit taking in all of these stocks. Moving on to Reliance Industries, and they came out with a stellar set of numbers after many quarters. We saw growth in retail, geo, as well as the O2C business. GRMs moved better in the refining business. Now, if you look at brokerages, they gave a thumbs up to the quarterly numbers. CLSA has a buy call on Reliance Industries. Target is 1650, and this outperformer rating is primarily due to the valuations, the possibility of value unlocking in geo as well as retail. In fact, CLSA believes that the retail EBITDA came in 8% ahead of the expectations, as EBITDA per square feet rose to a 10-quarter high. So the retail business, which was lagging, probably has caught up for the quarter, and the consumer grocery business grew nearly 37% on a year-on-year basis for the quarter gone by in the retail business. Morgan Stanley also has a target of 1662. They believe that the overall earnings were better given the fact that the expectations were low. Chemical margins outperform industry benchmarks, and retail EBITDA, as earlier pointed out, was up 9% year-on-year despite store rationalization. And Jefferies also has a buy call. So we have all of the brokerages which have given a buy call. Target is 1660. Which probably means that from the current market price, we have a good 30% kind of upside. Jefferies believes that the Geo's EBITDA missed estimates by 2% or slightly lower ARPUs and higher cost, but they are expected to pick up in the coming quarters. By the way, the ARPU for Geo for the quarter was 203 rupees 30 paisa, which was 195 rupees last quarter. So the price hike which telecom companies have taken, they are started to reflect in the ARPUs, and the possible listing of Geo could be the next big target for FY26, according to Jefferies.
That's true, Yatin. And I think the entire impact of the tariff hike is yet to be felt. So next quarter as well, there could be an impact of the tariff hike that was undertaken for Geo. But that was about Reliance Industries, the bright spot in today's trade. But on that note, let's take a look at Axis Bank. That was the second big loser on the index today. Numbers of weak business momentum at a 15-quarter low. Slippages have increased on a quarter-on-quarter basis. CASA was at current account and saving account. That was at multi-month lows. Margins also at 10-quarter low of 3.9%. I think the only bright spot could be a fall in operating expenses, Yatin, that has been elevated for most banks. Asset quality also worsened, but tight deposit and credit growth is what the management has said that they expect until FY26. And they've also pointed out that 90% of the slippages came from the retail portfolio. Let's take a look at what the street is saying about Axis Bank's poor performance. HSBC, although has kept a buy call, target price has been cut across brokerages. So for HSBC, they have cut the target price to 1170 from 1350 rupees. They have said that both deposit and loan growth have been below estimates. High credit costs was among the key misses, according to HSBC, and loan growth is at risk of being below industry levels in the medium term. So they see a lot of pain when it comes to loan growth, and they've cut their EPS estimates by 5 to 11% over FY25 to FY27. Talking about Jefferies, then they also have a buy call, target price at 1400 rupees. But they have said that the third quarter profit was above estimates with better pre-provision operating profit growth of 15%. Unsecured loans were largely stable, and that, according to Jefferies, is a comforting read through. Sustaining average deposit growth at current levels and moderation in slippages, these are some of the key factors that may perhaps lead to re-rating, but these two are the key monitorables when it comes to Axis Bank, according to Jefferies. Lastly, Morgan Stanley, it has an overweight rating, target price at 1300 rupees per share, and they've also mentioned that revenue miss and higher credit costs were the key factors behind the miss. And third quarter, according to them, also reflected macro challenges. The focus for the bank is prioritizing profitability over growth. That's the view Morgan Stanley has. And they've said that the stock remains the most levered for potential cyclical macro recovery. So all in all, target prices have been scaled down, but most of the brokerages have retained their buy call and overweight call on the stock. The stock, of course, has not been doing all that well. Look at the 3-month, 6-month performance. It has given negative returns, but yes, looking at all the metrics, fairly a big miss.
And I think the management also said that the business environment remains tough.
Hmm.
The deposit growth was only 9%. So I think that also limits the overall growth, because
Hmm.
deposit mobilization clearly is becoming a challenge for the private sector banks. Obviously, it is improving, but the management commentary probably playing a role in Axis Bank. That stock ended almost 5% lower in trade today.
That's true, Yatin. We've ended the week on a negative note, the day on a negative note as well. But next week is important,
Hmm.
20th of January. That's when Trump, takes over, takes charge officially, and what he announces in terms of tariff and other policies.
Hmm.
The markets will be clearly watching out for that. Remember, he's already called India the tariff king,
Yeah.
so you never know what he does. And we've all been through this experience of him, making coming out with a tweet, and then the entire global markets going into a tailspin. So yeah, let's see how things really pan out in the coming days. But crucial week ahead, and only 2 weeks to go for the budget as well. So quite a few things to watch out for going forward. But with that, we've come to the end of this edition of Closing Bell. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and have a great weekend.